It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Monday evening, July 11th, 2016. Cracking open this second full week of the month of July. Hope you guys and gals had a great summertime weekend. I know we did here in Los Angeles. Boy, today was Reaction Monday, following last Friday's non-farm payroll report. And we have some excellent trading opportunities setting up for tomorrow. Crude oil and gold are bearish, while the S&P and Euro are bullish as we head into a very exciting Tuesday's trading session. Now, of course, before we jump into our charts, look at the schedule for tomorrow and put it all together in some strategies for you crazy animals, I do want to remind you, only place to watch the full-length version of this newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's a link in the description of the very small portion of this newsletter in the newsletter YouTube video. Follow that link in the description of the YouTube video. Come join me here on sidewaysmarkets.com for the full-length version. And don't forget, while you're here, grab a free pass to attend the trade room as a guest. If you're not an advanced member here at School of Trade and you'd like to join me on the free pass, grab that in the upper left-hand corner. Don't forget to join the mailing list. Name and email address, and then check your inbox. I'm going to send you a welcome email to make sure we have all the details correct, and then I'll send you an email every evening when the nightly newsletter is ready to be watched. Also, please don't forget you can download all the charts you see me using in tonight's video right below the video tonight, where it says click here to download today's charts. And of course, I remind you, you're going to learn more in 1 week with me on my free trial. Join the free trial on the website, right-hand side of the website, and we have a brand new free trial here at School of Trade. If you'd like more information about the free trial, grab a copy of your trial on the right-hand side. And if you've already taken our free trial, contact me in the office. Let me know if you want another go-around, and we can reactivate that free trial for you. Get a brand new free trial as of Sunday evening. So don't forget, contact the office if you've already taken a trial and you'd like to do a redo, because it's some great new information to share with you. And as always, don't forget, you can always give me a holler here on the live support button on the right-hand side of the website. It's also on our blog as well. All right, guys? Hope you had a great weekend. Boy, another busy start to the week. Let's take a look first of all here what the calendar looks like for tonight into tomorrow. Got a full week ahead of us here as these markets are cruising through this month of July. Last week kind of slipped through, right? You remember you had the holiday shortened week last week, and of course this could be the first kind of full week of the month of July, so we definitely have some very high expectations for this month. We got some minor news coming out of Japan tonight at 7:50 p.m. Eastern time. I don't think that's going to be too much of a market mover. Tomorrow morning we get some more minor news from Germany and of course industrial production in India. So relatively small news. I think the big news tomorrow is going to be tomorrow morning at 10 a.m. the job openings, layoffs, and transfer survey. You know my gal Yellen, right? That's her favorite news event. JOLTS report tomorrow. This one is even more important these days than the supposedly red star jobless claims report, right? I'll take a JOLTS over the jobless claims any day of the week. And then tomorrow night, of course, we've got to worry about that merchandise trade balance out of China. Always important whenever we're dealing with trade balance coming out of China. We'll talk more about that in tomorrow night's newsletter. So I really don't think, I think a lot of what's going to be happening tomorrow will be price action based. We have really one news event tomorrow morning during the London and U.S. sessions that really might have some ability to move the needle tomorrow, and that's the 10 a.m. JOLTS report. Don't forget, we'll be opening up our trade room tomorrow morning at 8 a.m. Eastern time, and we'll come back and talk more about the merchandise trade balance tomorrow to China, right, which is, of course, tomorrow night at 10 p.m. Eastern time. So that's more in play for Wednesday's session. Nice, easy schedule for tomorrow. Watch that 10 o'clock JOLTS report, and, of course, that'll do it for us on the schedule for tomorrow. Let's go crude, then we'll go S&P, gold, and maybe a little bit of euro to finish off the session here this evening. Great to be back here with you, by the way. Crude is bearish after completing the measured move target this evening. Today's market was back and forth from the beginning, reacting to last Friday's non-farm payroll report, with the bears taking control and finishing the session right at the low of day. This market is clearly bearish this evening, and it has to be traded as such until proven to be a bull market. How do we know it's a bull market? Higher high, hold the pullback, right? So market's clearly bearish, and we have to remember that. No matter what we think is going on here next, right, we have to remember this market is a bear market until proven otherwise. However, the bears reached their measured move target. They got their objective at what may possibly be a large trading range for the day. Look at the size of them wicks at 44.53. Look at those wicks at the low, right? You can definitely see sellers taking profit, buyers entering at the low. Okay, so this may just be the low of one big trading range. Again, though, it's a bear market until proven otherwise. Okay, now, although there is room for further downside to the low of that bear channel, the most reliable trade for the sellers will be after a correction back up to resistance overhead to help them avoid quote-unquote selling low. Buyers need to stay patient and look for seller failure either at the low of the range, possibly using the high of the channel as support for their first pullback as they try to take control of this market to go back higher. At this point right now, again, it's clearly a bear market. There are really three main components to this chart. There's a little bit more, but I think the three main components. First of all, the bears are in control, right? There's a bear channel, and we expect to see rotation. We expect to see rotation from the high to the low to the high to the low to the high, and now down to that low. So there's definitely more room for this market to go lower before it goes higher, right? There's absolutely no reason why we can't open up in Asia and then spike down to finish off the double down to really dig into the low of that bear channel. Now, with that bear channel, where will sellers be looking to trade? Back at the highs, right? Sellers are looking to sell the high of that bear channel. Now, the hard part is going to be if the high of that lines up with what potentially could be the low of that range. So this is where things get a little bit choppy here tomorrow because sellers are going to be looking for an opportunity to sell the high of the channel without really selling into what could be a range low here. Okay, so watch out for that tomorrow. Also, buyers. This is where the buyers have a shot too because the high of that channel, the buyers can use that as a nice support area. Now, if the buyers can hold that pullback above the high of that channel, then that's going to give the bears reason to believe their next pit stop is going to be up at the next area versus overhead. So if they can hold the pullback, they've definitely got the attention of the rest of the bulls, and they've got that window now to go up to that 45.13. Just a heads up, obviously, that measured move at 44.81 will be short-term resistance if it's overhead. So the bear channel tells the sellers, look to sell the high of the channel. Just watch out, though, around the low of that trading range, which is going to lead me to the next topic. The buyers, though, I think that's where the buyers really want to stay patient. Look for that breakout, pull back. You know, maybe you can use the low of that range. Maybe, of course, you can use the top of that channel. It will all depend on what this price action looks like. If it even goes higher here, right, it may just collapse here, right, and then go back down, then back up, right, and give those sellers a shot to sell the high without having to go through all that trouble, right? So we'll wait and see. Second piece of the puzzle right now is this range. The range, this is where we have to remember, trade what you see, not what you think. I know. These wicks are pretty big. They make it a very easy case to argue for a range-bound buy right now. You can't buy this yet. Well, you can do whatever you want, but the most reliable trade is going to be waiting for, if you want to treat this as a range, what would be two ways to be a buyer, right? What would be two ways to be a buyer at the low of a range? First of all, one try, two try from the sellers. Get the two-try rule. Let the sellers try once, let them try twice, and then you get the buy off the low of that range. What would be the other option? The other option, a little more reliable, would be to get that two-try rule, see the sellers fail, and then buy the pullback, right? So these are going to be your best options here now. Either the two-try rule, right, the failure from the sellers, the low, or more reliable, the breakout pullback above that moving average, pullback, strong signal candle, and off you go. right? Why is the second example more reliable? Because in the first example, it's still a bear market. In the second, right, after we get back above the moving average hold, now that's a bull market, right? Now, again, it might not be bullish forever, but it's going to be hunting for that next area of resistance, and then, of course, all the way back up to the high of day at 45.77. Okay, so be aware of that. If this does start to get stuck at these lows right now, the bulls have two opportunities there to buy those lows. Now, I think this is also a really important feature or aspect on this chart. The measured move, right? The A to the B to the C. We go through the measured move, right? We trap high. Oh, you gotta love that, right? Little two-legged correction. Isn't this what we talk about every night in this newsletter? Right? You get your measured move. What's the measured move? It's a market objective. What happens at a market objective? Profit taking, bargain hunting. Sellers take their profit, buyers try to buy, and we get that two-legged correction back to where? Back to a prior area resistance, and then a revisit back down to that low. That is what you can expect to be the most reliable way to trade this. We get the triple measured move now. It's just like a measured move, but it's got 3 legs instead of 2. Now again, we may get down to that double down off the highs. This definitely still has room to keep going lower. But one thing we know though is that once we reach a market objective, we know sellers should be taking their profit. We know bargain hunting buyers, although it's not reliable, will be trying to buy the low, and we'll expect to see a 2-legged correction back to an area of resistance. Now, the area of resistance could be a few of them here right now. First of all, the measured move is resistance at 44.81. The moving average is resistance at 44.89, right? The high of the channel is resistance, okay? And of course, we talked about the 45.13. Difficult to tell which resistance area is going to be the one they're going to use. So what we'll look for is, let's say we go that 2-legged correction back up to a prior swing, look for buyer failure, and then back down. So right now, we've got, again, a couple things here. Sellers want to sell the high of that channel, right? Buyers want to use the high of that channel. We talked about that earlier. The low of a possible trading range. If it starts to get hung up at the lows here, don't forget seller failure, right? 2-try rule from the sellers. Don't forget about that moving average, right? Breakout, pullback, and go. Treat it as a range. And again, very, very consistent how we see that market objective, 2-legged correction, buyer failure, and right back down again. Be looking for that tomorrow if you're a bear. All right? Should be an interesting session here for the bears. And don't forget, you're not alone out there. If you're a crude trader, come join me tomorrow morning. We'll be doing it together in the live trade room. Now, how about that S&P? Again, boy, apparently this whole Brexit collapse just isn't panning out the way the news media wanted it to. And to think I spent all 36 hours glued to zero hedge for, right? I'm kidding with you. Obviously, you can see the bulls are in full control here of this market. E-mini S&P is bullish and trading at the lows of a bull spike in channel this evening. The S&P made new all-time highs once again today as traders try to anticipate the likelihood of another rate hike in 2016 from Yellen and co. after last Friday's somewhat impressive jobs report, right? The jury's still out on that one. The bulls had control for pretty much the entire session today, starting out with a big spike, was turned into a spike in channel, which is now rotating back to the lows and giving the bulls another chance to reload the weapon on the way back to those all-time highs again. The measured move combined with fresh all-time highs resulted in a rather strong profit-taking sell-off to end the session today, which will likely result in another attempt from the bears. But we assume that buyers will be waiting to buy all the dips tomorrow with the goal of going back up to those highs. Sellers, you guys have the opportunity to sell the next test of the moving average. Just make sure you don't sell into support at the low of this bull channel. Or the bears can wait for a breakout pullback below the battle zone, right? 2650 area there. But they need to be careful because we assume that seller failure will result with buyers buying aggressively with a target back up to that high. When you see a market like this, When you see a market like this that literally takes the rocket ship higher,